Hello, my name is Jimmy. I'm here at Toa Payoh Rise, and today I'm going to talk about a company called Nanofilm. This company is going to be IPO this week, and is this worth to apply for that IPO? And I'm going to talk about it. Now, first of all, what does the Nanofilm do? Now, in my hand, there's this cling wrap. It is one similar to the one you use at home to wrap your food, your vegetables, and keep them fresh in the fridge. Now, Nanofilm do something similar to that, except that this film is going to be very, very thin to the extent that it is invisible. The application itself is very specialized. It's for industrial purpose only, and it's for precision engineering. So that's basically a very simple description of what the company do, because the technical terms are really, really too complicated. Even myself, I don't understand what they are doing, right? So the thing is that their business model is B2B. Now, looking into the company finance with their 672 pages of prospectus, I come up with only a few key important things. Is that the price to earning ratio for this IPO itself is 42 times. The operation margin is about 25%. And this number has been consistent over the past 3 years, and the revenue itself has actually grown up. So it is a good company, right? It has a growth, it has a potentials, and it is in the niche industry. Now, in the prospectus itself, it also disclosed that the company has only one key customers, which basically contribute to their top line, their revenue. Now, this is something that I'm not too comfortable, but let's keep it that way. Now, to know whether if this company is it a high valuations or at low valuation at this price, at the IPO price, we do not know, because we don't have a similar company here in Singapore. So we have to look beyond that. And I found out one company is called Thermo Fisher Scientific. This company is actually located in US, listed in the US stock exchange. And this company has a market cap of 169 billion. It has an operation margin of about 15 to 19%, and it has a price to earning ratio of about 36. Looking into that company, it has a huge diversified base of customers, and their technology basically applies into different other industry as well. So comparing this company TMO versus Nanofilm, and obviously we can basically make a comparison thinking that perhaps the Nanofilm is a little bit on the high side of price earning of 42 times, and plus the fact that they only have one single customers contribute to their top line. That makes something really, really, as a retail investors, I will be concerned. What happens if they lose these customers, and then what will happen to this company? Now, of course, on the other hand, the other concern that I have is the owner himself are cashing out. When he cash out $157 million, does that mean that it is something that the owner himself has no incentive to push the company forward? Now, it's pure and simple, right? I mean, if you give me $157 million, I think I'll be quite, in fact, I'll be very, very comfortable. And moving towards pushing the company to the next level is a big questionable issues, right? So based on that, this kind of information that I put together, my personal conclusion is that it is an IPO that is worth take a look, because the institution's subscriber is already oversubscribed by 19 times. It's 19 times oversubscribed. So if you want to apply for the IPO and sort of like stack it, for a short term, think that's perfectly okay. But as for long term, then this long-term investment strategy will probably question marks, whether should you want to stay invested in this company given the fact that the reasons I given above. Well, that's all for today. And that's my personal conclusions, and whatever it is, the IPO is going to close by the month end. If you want to apply early, bear in mind that every investment carry risk. Right, till then, that's all for now. Goodbye.